My name is Tim Manning. Wanted to definitely discuss the 5 frequent asked questions on options trading. Let's get into it. The number one that I get a lot is, why should I trade options? While there are many strategies you can implement with these derivatives, of course, there are many types of derivatives, but in this particular session, we're talking about options. One of the most common is the cost to play is lower versus other forms of trading, depending on your strategy. Whether you're hedging or speculating, the cost to acquire the particular underlying or the option is lower. What do I mean by that? Um, Options are just what they are, options. Depending on your strategy, you have really the basic forms of options. You have calls and you have puts. If you're buying an option, that means you have the right to buy. That doesn't mean that you have an obligation. So, um, this is basic, but if you have the right to buy something, that particular option fee or that particular option price is only a portion of that particular stock, depending on what strike you buy it at. So what I mean by the cost to acquire is lower. You're not actually buying the underlying. You're buying the right to. If you're in the sense of buying a call, you're buying the right to exercise the option to buy that particular underlying, whatever it may be, and vice versa. If you're if you're selling um, a particular call or put, you're having the obligation to sell whatever the particular underlying may be. So maybe we'll talk about that a little later. But the second question is, how should I trade options? It really depends. Since the cost of entry is lower, it is beneficial to still take it is beneficial to still take wise trade entries and exits. It is not for me to determine your trading style because everybody is different. Your trading style and your risk tolerance really will influence whether you do more hedging or speculating. So if you're if you're a value investor and you're really not concerned about taking profits, within 2 months, 1 month, 3 months, whatever the particular expiration is on the option, you may be interested in hedging a portfolio of, whether it be oil or whatever the case may be. We can get into the specifics later. If you're interested in that, just make a comment below or send me a question. But the cost of entry is lower, and you should definitely, pick your particular trading style based on your goals. What broker should I choose? I recommend having more than one broker just to have some leverage in the industry. There are a lot of different types of brokers. You have full service, you have discount, and you have, even in the option industry, you have an option specialty. I know some of the brokers out there, like, uh, one of the platforms that I follow, Tasty Trade, they have I don't think they're a broker, but they have a nice platform for option traders. It's called Doe. So I'm kind of giving a plug to Tasty Trade, and of course they didn't tell me to say this, but they have a real user-friendly trading platform. Now, I'm not saying that you should use them, because every particular broker have different fees, that have different ticket charges and all of those different types of things. So what broker should you choose? It really depends on, how frequent you are going to travel, because every trade has commissions, and all commissions fees are not the same across the industry. So you want to take that into the account, and also your flexibility of trading strategies in the account. Because options are derivatives, you have to there's what you call a margin. So make sure when you're looking into getting a particular broker, just weigh the pros and cons of the fees and all those different types of things, because just because a company may have a higher fee for a particular product or whatever the case may be, it doesn't necessarily mean that you have to discount them because they're the higher. They may have more customer support. So you have to weigh the pros and cons in whatever, strategy you're looking at. How do I pick the right option trading strategy? That's another question I get. Since options are tied to what is called an underlying asset or security, picking an option strategy has a lot to do with characteristics of the underlying. Therefore, option values fluctuate based on the market of the underlying. Start with understanding the underlying you desire to trade, whether it's a stock, future, index, currency, whatever the case may be. So you want to definitely make sure you understand, what the market is like on that particular underlying, what the volatility is like, what the liquidity is like. So depending on your strategy, it's going to fluctuate the value and the price of the option based on the underlying. The next one is option trading for long-term or short-term strategies. Um, it could be used for both. Now, most strategies are, most trading strategies are for 1 year or shorter, depending on your intent. Whether you are a value investor or speculator, you can use options to protect against loss or for profit. Value investors are not looking for huge jumps in the underlying in a short period of time, but over a long time frame. And that's vice versa for traders. Traders are looking more so of a short-term um, um, jump in price, whether it be to the upside or to the downside, depending on their strategy. So usually, people that are value investors that use options, they don't usually look further out than a year. Um, because a lot of things can happen outside of a year's time, but you do have some value investors that want to protect against their particular portfolio uh, by the same time next year per se. Um, so thank you for listening, and I look forward to talking to you soon.